based on our research took 100 minutes just to get the data. You can now review that same amount of information, not in 100 minutes, but in 100 seconds.
My name is Jim Fuhrmann. I'm the Vice President of IBISWorld's Commercial Banking Client Service Group. I'm joined here by Ben Miller from nCino. We're excited to have this conversation with you to help launch the IBISWorld and nCino partnership.
Hi, everybody. Welcome. I here at nCino am a manager of our product management team. Been with the company a little over 5 years, have a 10-year banking background, been really excited to deliver what we're going to talk about today.
From more of a technical standpoint, what is nCino's continuous credit monitoring tool?
Yeah, it's a great question. We have the loan origination system. What are we doing from a monitoring perspective? We can originate the loans with nCino, but how are we monitoring those things? It's not just for one person at the financial institution. It's going to be serving relationship managers, credit analysts and underwriters and portfolio managers, not just even within commercial, but also in small business banking or even upmarket to corporate. It's all embedded, obviously, in the nCino platform, a single destination to understand a specific borrower in your portfolio. That is where you're going to have the real-time insights and automated risk monitoring throughout the entire credit life cycle, not just in origination, like we've been the entire time, but now we're really moving into this monitoring space.
Safe to say CCM does quite a bit. The buzzword of 2025 for sure was efficiency in banking, and it's a tool that definitely brings that.
Yeah, and I think it's really solving some very specific problems. Data is typically scattered across multiple systems, Excel, even Word documents with things like credit memos, and then loan origination systems like nCino. Very manual, very reactive, and just limited visibility into health. So our goal was to reduce the time it took for a financial institution to just start a review. Based on our research, it took 100 minutes just to get the data. And you can now review that same amount of information, not in 100 minutes, but in 100 seconds. The financial institutions can actually really identify deteriorating credit way earlier. We're freeing up bankers from all that manual work so that they can actually focus on real risk management and growing relationships.
IBISWorld is the largest provider of human verified industry information that spans globally. nCino is a global focused company that has continued to grow alongside financial institutions. So what brings IBISWorld and nCino together?
Over 70% of customers asked, will you have third-party industry data like IBISWorld? Our customers provided valuable user and design feedback, and it helped shape the IBISWorld integration within continuous credit monitoring to what it is today that's really meeting their needs in real-world examples. We had feedback, again, not just from smaller institutions. We were talking to 30, 40, 50 billion plus financial institutions, so all the way up through the enterprise space. We really diversified the feedback and the users that we ended up talking to through that, not just from relationship managers, but also credit analysts, credit managers, portfolio risk personnel, all the way up to CFOs and chief risk officers, even some CEOs as well. So it was a very widespread feedback loop. The integration itself is really pulling in IBISWorld data directly into that experience. We have the risk grades in there, the industry analysis, there's critical data that bankers are really used to seeing separately and kind of doing the swivel chair of going from nCino into IBISWorld. And these were the top things that we wanted to pull in, at least initially. It's going to be making life a lot easier for users, and all the data is going to be in one place now, getting that industry specific context, the better insights. And this is just the first pass of what we're going to be doing, really becoming a trusted advisor to their own clients as well.
From an industry perspective, what IBISWorld's integration looks like within CCM is our 3-point risk scoring model, which includes revenue risk on a short to medium term basis. It includes sensitivity risk, which includes some of those macroeconomic drivers that move the industry, as well as risks based on the industry's structure. So 3 points, 3 measurements of risk come together to make our overall risk score. And banks nationwide are using that risk score as a metrics within scorecards to help make these more accurate credit decisions.
With continuous credit monitoring, obviously including the IBISWorld integration, what I was talking about earlier of the 100 minutes to 100 seconds is inclusive of that IBISWorld integration as well. There is those key data points coming from IBISWorld, the 100-second view, I understand the risk. And that's one aspect of continuous credit monitoring. The other pieces that we're pulling together into this single view are things like loan delinquency, covenant performance, risk rating performance, key financial indicators like debt coverage ratio, liquidity, leverage, credit utilization, overall LTV, collateral concentration. And we're wrapping all of those things. There's over 40 data points in the system into a risk score, essentially, of whether you need to take action, no action is needed, or there are early warning indicators. So if you are a credit analyst or an underwriter and you want the details, certainly, you will be able to drill into that and get deeper insights into the larger reports of IBISWorld.
If you are an IBISWorld and nCino CCM subscriber, the process to get this integration set up is really easy. Reach out to your relationship manager and we'd love to have a conversation. And from there, we could flip a switch to get it all turned on.